Hey friends, it's Jordan here with Credit Matters. Today I want to talk about a question that many people have asked me, which is, I have one credit card, what about my next credit card? So the question of what second credit product should I have? If you're new to Credit Matters is a tool and a resource for Canadians designed to inspire, inform, and demystify the credit game. My goal is to equip you with as much information as possible to succeed on your own terms. If you haven't already, please subscribe, give this video a thumbs up, it really helps me out. Today we're going to dig into what second credit product should you get. Now let's start back at the beginning and acknowledge a few things. Firstly, remember our goal with our credit journey and with our credit report is to grow the length and the breadth of our credit report. We want to grow it in all dimensions. So that is to say, we want many accounts with long histories. We want a high average age of accounts. We want low utilization, and we want entirely on-time payments. Back to that first aspect is, of course, a large number of accounts. Our goal with our credit report is to be able to tell a lengthy and detailed story to potential lenders as to why they should give you credit, why they should lend to you, why they should entrust you with their money. So we need to have a lengthy and detailed account of why you are the best person to be able to handle a credit card with a $10,000 limit, or to be qualified for a mortgage of 3 figures, and so on and so forth. So with that said, if you just think right now, if you only have one credit card, chances are you probably have one credit card that was issued by the bank that you do primarily all of your banking with, probably a bank you've been with for many years. You probably got a credit card many years ago. You use it now and then. Maybe you do pay it off in full. That's fantastic. Every month, maybe you carry a balance, which is statistically true for the majority of you, but you have only one card. So if you think now, if you believe you want to get a mortgage in the future, you want to get a car note in the future, you want to be able to be qualified for some of these things, you can imagine your credit report reads so much like your financial resume. It's kind of like you want to get a mortgage maybe 5 years, 10 years down the road, but if you only have one credit card, the question is going to be, why should a bank trust you with a $300,000 mortgage of their money when you have demonstrated that you can handle one credit card with a limit of $3,000, as an example? Especially if you have missed payments, any amount of missed payments over the past couple years, you are telling a very clear story to potential lenders, and that story is, don't lend to me, I can't handle more than this. And when that's true, and that's a very fair and real reality, as dramatic as that may seem, our goal here, once again, is to tell a lengthy and detailed story of why you should be trusted. And that logically follows that you need to move on and have an additional credit product. So we want to set some goals and think long-term. Long-term, as you've heard in my past videos, my goal for you is to be able to have 10 credit products. And we'll start with that as a benchmark. Why 10? Well, we believe that ultimately the best results, the way that you can do the absolute best in terms of number of accounts, is to have more than 12 accounts. So we want to be able to shoot for 10. I think it is a stretch goal for many of you. And understand that that's not going to happen in the next 1 or 2 years. This is going to take years to happen. When I think back on my journey, I believe I got my first credit product before I was 19. It was from my first bank, CIBC. They wanted to offer me the Visa Classic. And at the time I had this summer job between high school and university. And I was like, sure, I knew nothing. And within a few weeks after that, they also said, Jordan, why don't you get the Visa dividend? And I thought, okay, sounds good. They said this is going to be good for your credit score, and access to credit is really important. I thought, okay, why not? Then it was probably another number of years, maybe at least 4 years, until I got my next credit product, which was a Capital One MasterCard. And so by then I had 3 cards in total. But as you can even see there, that was at the very beginning of my credit journey. That was beginning 10 years ago, moving up a few years after that. And that took 4 years to even accumulate 3. So it's important to understand that in order to get to 10, it's going to take years. The reason why it's going to take years, in my recommendation, and also just reality, is because every time you apply, you could go today and apply for 10 different cards. You can apply for 4 cards at one bank, 3 cards at another, 3 cards at another. But for every single inquiry, it's going to bring your score down. Remember, hard inquiries are going to lower your score. And that's okay. It's temporary. It could be 5 to 10 points each. And within a few months, your score will rebound back to prior to those inquiries. But do keep in mind that those hard inquiries are visible when potential lenders pull your credit report. They can view all of your hard inquiries. So that's why we're going to take our time. We would begin by applying for one now, and we might wait a few months, see our score rebound, apply for our next, wait a few months, and so on. So you want to be able to space it out, and it will take years to do. The second reason why we want to take our time with this is one of the metrics of our credit score is average age of accounts. If I go and apply for 10 credit products, get approved for them all today, but I only have 1 credit card right now, my average age of account is going to plummet and basically become 0, because having 11 products by that point, all brand new, is going to bring your average age of accounts down to basically nothing. And so that alone is going to bring your score down. The only way to be able to avoid that is to allow your accounts to age. That is to say, to take your time and allow all of that for time to simply pass. That's the only thing you can do about that aspect. So we do want to take our time when growing forward with getting additional products. So the main question here, now that you understand some of the dynamics as to where are we trying to go, so we know we have a mission we're on. We're not just doing anything that seems to make sense or is just advantageous today, but we're following more of a long-term plan. That is to say, to grow to 10 accounts, 10 credit products or more. What do we want to do now? What makes sense to do first? The first and most important thing is to think that the first 5 of those 10 products needs to be products that you're going to want to keep and be able to simply keep for many years to come with very little cost to you. This is what's referred to as building up a base of cards. So we basically want to say our first number of cards, let's say 5, the first 5 cards, we're going to build up a base of cards. Once again, these are cards that we're going to be keeper cards. They're going to be cards that we're going to want to keep for the years to come. So let's think, fast forward 10 years, you're going to still have these cards, and you're going to have them because perhaps they provide at least some small perk or benefit. Or maybe none at all, and that's okay, but we want to target ones that do provide some type of a benefit or an advantage if you are going to be using them. The second is that we want to have cards that have 0 annual fee. We want to have cards that are perfectly fine and cost you nothing to be able to keep long term. The reason for all of this is because you want cards that are going to age well. They're cards that 10 years down the road, you can still have them. You will not have been tempted to cancel them because you were tired of paying an annual fee and actually getting not enough value in return for having them, which is of course the goal with these products. But we want to have cards that are keeper cards. They age well, they cost you nothing to hold. Essentially, every single of the major banks, from TD to Scotia, from BMO to CIBC, and so on, they all have cards that have no annual fee. these are the cards you ultimately want to target. So you're going to want to be able to go and do some research and find out what of those cards are going to be best for you. In the latter 5 cards down the road, and that is to say this may be a time down the road, this may be 1 or 2 years down the road before you begin to get into those types of cards, you want to begin to look at what we might call mid-tier and upper-tier cards. Cards that do have an annual fee, but they return value to you. They may return value to you because they are cashback cards. They may have cashback in particular categories that make sense to you, whether it's groceries or gas or recurring bills or travel or things like that. Or, as I mentioned, maybe they are travel cards. They provide some type of perk or benefit regarding travel. Maybe they have good travel partners. You can convert some type of a points or loyalty program to be able to earn some points and be able to travel quickly, flights, hotels, rental cars, things like that. In the end, it's those types of cards that really provide the most value. And in Canada, especially, those cards usually come with fees. They may be $70, $80, or they may be $100, $150, etc. If you watch my last video, I did an unboxing of the American Express Gold card. This is very thoroughly a mid-tier or upper-tier card. It has an annual fee of $150. It earns points per dollars that you spend, and there are some perks and benefits. There's a whole range of insurances and coverages and protections around purchases and travel that the card provides. It's definitely one of Canada's best travel cards, and at $150 per year as an annual fee, it definitely returns some value. So that's an example of something that's a mid-tier or late tier. Once again, that card for me was definitely between my 5th and my 10th card. It was in my later game strategy. There are still other cards out there that I can get that have annual fees that also provide a lot of perks and benefits. But once you move on and you are in the 5 to 10 card range, you really begin to need to assess, are these cards worth keeping based upon their annual fee? Are they returning value to you for what you're paying? And are they redundant with one another? In Canada, because of the way our banking system and our credit card system is regulated and set up, you have a lot of cards that do mostly similar things. And nearly all of the major banks provide cards that do basically along the same things. Every major bank has cards that are no fee, that are good for balance transfers, that are good for students, that are good for cash back, that are good for travel, that have high annual fee, low annual fee, no annual fee. All the major banks basically provide a lot of similar products. So my hope with you is to be able to go through and do some breakdown of what some of those 5 great keeper cards should be. And that will be in a video yet to come. But today, I hope I help to shed some light on what should the strategy be, why are we going after a second card, a third card, and so on? What is our goal? Why are we going after 10 cards? Why is that worthwhile in terms of effort and organization? And what benefit is it going to be to my credit score and credit report in the long term? All right, guys, thank you for watching so much. Once again, like, comment, whatever you think about this video, subscribe. What I really do want to know from you, though, is are you in a situation where you have only one credit product and you're looking for that second? Or maybe you have two, but you're thinking, okay, Jordan, I want to go to 10. What should my next options be? I really want to hear the kinds of things that you are looking for. Thank you so much for watching, guys. Have a great day. See you soon.